And now, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. He's a successful entrepreneur, published author, top listing agent, a real estate and finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
All right, welcome to the Consumer Quarterback Show, powered by the Platinum MVP team at Keller Williams Realty, always helping you win in your real estate deals, buying, selling, or investing. We also interview great expert contributors every single day. Local economy, let's focus on the local economy, local experts here in Tampa Bay. Support the Salem family. Doug Levi, Strategic Insurance, coming up. We're going to talk with Doug about some stuff happening in the insurance markets. And, I tell you, with the storm and insurance and the economy, it's about as depressing as a Tom Brady post-game conference. It's a lot of stuff happening out there. We got Mark Haye as well, 21st Century Financial Group financial advisor extraordinaire here on the Consumer Quarterback Show. And then in for Justin Kelly today, Nick France, cpfloans.com. We're going to talk with him about mortgage applications, what's happening in that market, and how you can prepare for that as a consumer. Also got a feel-good story of the day. I got an Amazon driver makes a sweet delivery. It's grandma was Alzheimer's that he found on the street. So feel-good story coming up here on the Consumer Quarterback Show, powered by the Platinum MVP team, Keller Williams Realty. I want to give a quick shout out to my friend Ramin Kazami. He did a great job cleaning our home. He cleaned my personal home. The home looks beautiful. He pressure washing, soft wash. If you need that done on your real estate properties, reach out to Ramin Kazami, Heights Soft Wash. It's a pressure washing company here throughout Tampa Bay. He's bought a second truck now, so we got to keep him busy. He's doing a great job. HeightsSoftWash.com. HeightsSoftWash.com. Let him know the real estate quarterback sent you. All right, a couple of quick properties here that we're going to touch base with Doug Levi. We got properties at here in Tampa Bay. We got a new listing just hit the market, 1311 Gray Street. This is a Pinellas County beauty. Great opportunity with a pool home, fenced-in yard at 1311 Gray Street in Pinellas County. Looking for that one, John, if you can get that up there. So what we've got is this is a nice, affordable home. It's in Pinellas County. It's in Gulfport. You have some updates that have been done, some nice renovations done on this property. Yeah, 1,391 square feet, 3 bedrooms, 3 bath. You got a private backyard, mother-in-law suite, rental suite as well. Interior, exterior painted recently. Close to downtown Gulfport. You got rear alley access with additional parking and a beautiful pool. Great opportunity to own real estate. 1311 Gray Street South in Gulfport, Florida. Beautiful property from the Platinum MVP team, Keller Williams Realty. And I got a beautiful waterfront, Gulfront listing. This is on Southwind Drive in Hudson. Southwind Drive in Hudson. Vacant land. Build your dream home here. You also have bay access. So check out this beautiful lot. You're literally on the Gulf of Mexico. Now, you do have some conservation area behind you. There you can launch a kayak and a boat. At the end of the street, you have access to put your own private boat dock. So you have bay access. $200,000 for this lot. Gorgeous property. Southwind Drive, Hudson, 0.16 acre Gulfront lot, Sea Pines neighborhood. Build your dream home, and it's a great opportunity. You can see all of our listings at platinummvpteam.kw.com.
This is God's country.
All right, Doug Levi, was that a fair assessment? The insurance market's kind of depressing now.
Brandon, that gave me my laugh for the day, buddy. I say you're either going to laugh or you're going to cry, right? Whether it's the insurance market or the Bucks. So, it's interesting, but we'll say great day at Tampa Bay for everyone out there. And, we're just very thankful that our area really dodged the bullet with Hurricane Ian, Brandon. No doubt that's a pretty serious storm that hit our state. And we're seeing the effects in our agency. I mean, we a lot of our clients are here in the Tampa Bay area, but we've got probably about 300 clients down in that Southwest Florida area that Cape Coral, Fort Myers, Sanibel area, and we've seen some pretty devastating claims. And so our thoughts and prayers and hearts and minds go out to those down in that area, because it's going to be a long recovery, no doubt.
Yeah, it really is. And what are you seeing so far? Like, what's the process like? Claims, people calling you up, they're kind of frantic maybe?
Absolutely, and I would encourage, a couple things. I mean, I think probably a lot of the people who've already had damage most likely have probably filed claims, but certainly if not, for whatever reason, if people have been out of town or second homes or haven't been able to get to the area, obviously you want to file a claim as soon as possible. I would encourage those out there as well. Although we love getting calls here at the agency, and we've got a really robust process in place of how to handle and file claims. If you're not a client of our agency here at Strategic Insurance, a lot of times you can file online. A lot of these carriers now do have the ability to, find your carrier online, put your info in, and start a claim process that way. And oftentimes the carriers are even telling us that that's one of the quickest ways to do it. And in fact, if a client calls us with a claim, which we prefer so we can get involved very early on, we would then go and start the claims process online. So, what we're seeing, Brandon, and there's been reports all across that have, varied fairly with a pretty big range. But I think I saw from the state of Florida the other day, there's already been over 500,000 claims filed, projected damage around $7 billion. Some of the estimates have shown that this could be anywhere from 40 to 70 billion when it's all said and done, and everything sort of, runs its way through the process. So, however it's looked at, this is definitely a major blow to an already really beleaguered market.
Yeah, Doug Levi here on the Consumer Quarterback Show, Strategic Insurance. He's our expert contributor for all things insurance here in Tampa Bay and the Gulf Coast region of Florida, of course, throughout the state of Florida. So, man, that's a big number, 40 to 70 billion potential. Right now, they're saying it's currently at $7 billion.
Mm-hmm.
Wow.
Yeah, that's what they're saying. And again, over, I think, something like 564,000 claims have already been filed, right? Already been filed. So, and some of the really big names like Citizens, they're projecting already, I think, maybe $2 to $3 billion in damage. Universal Property and Casualty, which is a pretty large carrier, is, in fact, they're the largest carrier in the state, Brandon, after Citizens.
Wow.
They're already projecting over $1 billion. And the challenge, and just to, again, I know obviously your wheelhouse is real estate, and the shows talk so much about how we help consumers and just sort of what's going on. What we're seeing right now is truly a capacity issue in the insurance market, right? So I've got access and have over 18 companies. If you call me right now for insurance, several of those companies are still closed post-Hurricane Ian. And I think that's something that's maybe not as widely talked about or reported. So, for example, again, Universal Property and Casualty, one of our largest carriers in our agency, again, the largest carrier in the state after Citizens, they are still closed for new business right now. And, in fact, I reached out to, sort of our rep, if you will, and I said, hey, just checking in. When do you guys think you're going to open? What's going on? And it really was, hey, right now it's all hands on deck helping policyholders file claims, that they're pulling people from every department just trying to keep up with the volume of claims so they don't have the bandwidth and capacity for, taking new business on right now. So, it's definitely a dynamic place right now. There's a lot going on. We still do have Citizens is writing. We have had a few other carriers that have started to open up, Frontline, Olympus, a few other larger names in the state. But, again, it's buyer beware. There's a lot going on, and you really want to do your research and homework on your insurance program.
Yeah, and that leads me to, the next conversation is hey, what do we need to do now? I mean, we did dodge the bullet. I don't know if that whole Indian mound, thing is actually true, but it's worked the last few years, so we'll take it. But what do we need to do as consumers, Doug? What questions do we ask? And it sounds like a great time to get a review as well.
Yeah, I think it is a great time to get a review. I mean, I think practically speaking, out in the marketplace right now, a few things, and these have been a couple things I'm going to mention, Brandon, that have been true for a while, but I think they're even more important now. I would say if I were to look at a home at all, one of the most important things is the age of the roof, right? Mm-hmm. So for buyers out there, if you're looking at buying a home and you're working with, a great professional like Brandon, and the roof is a little bit older, that's something where maybe Brandon and your team can help negotiate or kind of talk through that, right? Because it's a big deal right now to the carriers, the age of the roof, right? So most carriers want roofs that are at least been replaced in the last 5 to 10 years, especially for shingle roofs. So I would say practically be looking at that. Certainly no doubt that, the newer the home is, and the further away it is from the water, those to the insurance carriers are more desirable, right? So obviously people love to live by the water, and I certainly understand that, and I get that living here in Tampa Bay. But those are some things that I think are going to even stick out a little bit more, as we get ready to go through the turn of the new year and then into 2023. We talked before we hopped on the air, Brandon, and I think Governor DeSantis has been doing a great job with his leadership through, really a true natural disaster, right? I mean, they're saying that Hurricane Ian likely could go down as the third most costly storm of all time, right after Hurricane Katrina and I believe Harvey that hit Texas a few years ago. So I think his leadership's really shown, and he has already been stating that he wants to have yet another special legislative session in early December, likely after the elections, where he's going to, really try to initiate more reforms to help the property insurance market. So that's on the table, and it looks pretty likely that that's going to be happening sometime in early December.
Yeah, and Doug, that's a key point too. They had a legislative session a few months back, session, and when you look at what brought that on there was a lot of fraud, there was a lot of attorneys' fees. Even the governor mentioned it in the debate the other night, where he just totally obliterated Chris. But it was a great to see, because he was talking about the amount of fraud, the amount of attorneys' fees. He said something like the homeowner would get a $20,000 payout, the attorneys racked up like $400,000.
Yeah, no doubt. And again, I know we've got show partners that are attorneys. We have friends that are attorneys and all that. And so, anytime we have these conversations, I always want to make sure it's, this is not just, hey, shaking our fist at the attorneys, but there are definitely some out there that are bad actors. And, it shows or something we've shared on the show before, Brandon, that I think is very, there's lots of statistics that can get thrown around, but I think one of the most telling is that if you look at the entire country, look at all of the United States, and then you look at times where there's litigation with regards to homeowners' claims, right? So that means an attorney is stepping in with a policyholder saying, we're suing the insurance company because something was wrong.
Right.
80% of that, 80% happens in our state.
Yeah.
Right. So you look at the entire country. We're a big country. You've got states out there like Texas and California and New York, and certainly when you look at the whole population in the United States, we're probably less than 10%. But 80% of the claims and 80% of the litigation is coming in our state. Yeah. There's something off there, right? There's an unfair incentive to do and file these claims, and it's certainly not saying that, every claim in Florida that every insurance company is doing is just doing people dirty, right? That's just not the case. So, frankly, I think the way it's set up and some of the structure in our state has been almost overly incentivized some of the trial bar and injury, kind of the personal injury type attorneys out there to sue, because you just hit the nail on the head, and you do see this. There are times where an attorney may get some huge payout just for litigating and working on a claim, and an insured is getting a fraction of that. So, that's one of the biggest things. That there's something called assignment of benefit, and one-way attorney fees is another sort of issue that's been going on in our state. And these are some of the things that they're continuing to work to address, that I think we absolutely need more reform, because, I've been doing this a long time, Brandon. I've been doing this 19 years. I started when I was 7. It's a joke, by the way. But I'm on my mid-40s now. I've been doing this, pretty much my whole career, and it is by far the most challenging market I've ever seen.
Right.
And, and I was in Florida after Hurricane Charlie and, Wilma and kind of those 04, 05, 06 storms, and saw, some really challenging times, by far the hardest. And so, I definitely think there's got to be reforms that are made, and some functional changes, or otherwise we're really going to probably be a one-trick pony with citizens.
Yeah.
So,
reach out to the show. We'd love to put you in contact with Doug Levi, longtime friend of the program. 813-917-1894. Just call or text the hotline, 813-917-1894. And we had an uptick in calls last week. Thank you so much for reaching out, supporting the show, supporting the local economy by supporting the program. And Doug Levi, longtime friend of the program, he can answer all of your home insurance questions. There's a lot to look at. Reviews. Do you have a wind policy? What about the flood policy? Reach out to the show. You can also hit him up on the website. Doug, about a half a minute back to you. What's the website? How do you want folks to contact?
Yeah, so you can go right online, TampaBayInsurance.com. You can reach out to us online, live chat with us, or you can email info@TampaBayInsurance.com. We love talking to people. We love working through and trying to do our best to help them. And the last thing I will mention, you just kind of hit on it, Brandon, flood insurance. There was huge amounts of flooding that occurred all throughout Florida, all the way we saw it in the center part of the state. Less than 30% of people in Florida have flood insurance. So I strongly recommend, if you don't have flood insurance, if you're not in a quote-unquote flood zone, policies are probably $400 to $600 a year. Well worth it to protect your largest asset.
Right, absolutely. Even if you are inland and they say, "Oh, it's never flooded
Exactly.
here," we've seen a lot of things happen. Doug, thanks so much. Appreciate the insights there.
You bet.
All
Have
right.
a great day, guys.
Take care, man. All right, coming back, we got Mark Haye on the flip side of this break here. Coming up, 21st Century Financial Group. I want to ask him what's going on with the economy, what he sees. He's got inflation, energy. How does that all play into your personal finances? We're talking with Mark Haye on the other side of this break. Consumer Quarterback Show, ConsumerQB.com.
This is Warwick Dunn, and you're listening to the Real Estate Quarterback Show, hosted by my man, Brandon Rhymes.
To get in touch with Brandon, call 813-917-1894. Online at ConsumerQB.com.
Dennis Prager here for Brandon and Lindsay Rhymes, owners of the Platinum MVP team at Keller Williams. Buying, selling, investing in real estate, their nationwide Keller Williams network makes them the best team to work with. Sellers, have your property featured live on air, creating multiple offers that gets your offer accepted, never overlooked. Call or text 813-750-0550, 813-750-0550, or ConsumerQB.com.
Have you desired more income and more freedom in your life? Now is your time. Keller Williams Realty has just launched our own real estate school, and you can get licensed for free. I'm Brandon Rhymes, host of the Consumer Quarterback Show, owner of the Platinum MVP team at Keller Williams Realty. And for the first 3 people who reach out, I will personally coach you. 813-917-1894. Call or text 813-917-1894. ConsumerQB.com. ConsumerQB.com.
You're listening to the Consumer Quarterback, Brandon Rhymes, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at ConsumerQB.com.
And we're back. Brandon Rhymes here, Consumer Quarterback Show, powered by the Platinum MVP team at Keller Williams Realty. I want to remind you as well, we got a nationwide network. If you're looking to buy or have a friend that's maybe moving to Georgia or Carolinas, we can refer that person out. We can research and find a great real estate agent nationwide and help you help them. So reach out to the show hotline. We'd love to connect with you. And we also feature our listings live on air. We help our sellers profit more and sell faster, utilizing our innovations with radio, TV, and internet marketing. 11810 Rodine Road. This is a property in Hillsborough County, vacant land, great opportunity to build. It's going to be an office space. It's going to be most likely an office space, maybe looking at this property as an investment opportunity. 11810 Rodine Road. Almost a full acre of land. You got a small structure on site. Great location for your business, professional office, surrounded by new development, new homes, new traffic light at the intersection. And it could also be rezoned to residential potentially. So you got to check with that. 11810 Rodine Road in Riverview, one of our hot real estate listings from the Platinum MVP team, Keller Williams Realty. And we got 202 Westchester is another beautiful home. This is a property that is in a gated community. There's a pool. You got a screened-in lanai. This is a gorgeous property at 202 Westchester. This is a owner that is motivated, ready to make a deal. We got open houses going on pretty often over at this property, so you should check it out. It's updated, 5 bedrooms, 3 bath, 2-car garage, almost 3,500 square foot. 202 Westchester Hills Lane in Valrico. And you can see all of our listings at platinummvpteam.kw.com.
Buy dirt, find one you can't live without.
And a lot of vacant land available as well. You can buy dirt from us too. So, all right, Mark Haye, welcome back in, sir.
Thank you, sir. Nice to see you.
Yeah, man. Likewise. So a lot of fluid, a lot of things happening out there.
Yeah, absolutely.
And, what's your advice?
One thing being maybe bring Tom Brady in and see what the heck's going on with the Buccaneers. Huh?
Yeah, exactly.
Man, that was embarrassing on Sunday. That's the Panthers.
And it starts with that drop. Mike had. That's how uncharacteristic.
He put it on a rope right to him too. Dropped it.
And then your momentum deflates. As a team, as a quarterback, I've been there. It's like one thing happens, and then all of a sudden, man, that's why it's so important, that momentum, man. You got to come out and take that game.
Absolutely. Well, let's find out Thursday night. Ravens coming to town, so we got a short week.
Tough team. I haven't followed them recently, but Ravens have always been a team that, especially defensive-wise.
Yeah, tough team. But we're fortunate our division's not very good, so we'll see.
Right,
what happens
exactly.
Thursday night. So.
Probably one of the weaker ones,
yeah,
right?
Exactly.
Yeah.
Well, today I want to talk about paying off the mortgage early and kind of what we do for our clients and a different option to do that. And it's typically, mortgage, 15-year or 30-year mortgage, and the difference between those payments or just sending in extra principal,
right?
To the bank. So,
yeah.
Obviously, people want to pay off their homes sooner than later.
Right.
People forget sometimes though that interest is a nice tax deduction.
Right.
So once it's paid off, you lose that. And so we tell people a lot, if you want to send in extra money to the bank, let's say you send an extra $1,000 a month into the bank, that money makes no interest. And you have to go back to the bank and say, Mr. Banker, I need that money back, and they're going to give it back to you with interest. Okay. So we tell people, why don't you put it in a side account over here, tax-free, compounding, and it's liquid. All right. So the difference between a 15-year or a 30-year mortgage may be $1,000 a month, and again, I'm just using that number for simple math.
Yep.
And then we put it into our side account, and 10, 12 years from now, that account is worth enough to pay off the mortgage.
Right.
Okay. Now, a few things that we tell people is if you send the money into the bank, obviously the money is at the bank, you got to go loan it. But let's say you get disabled along the way, all right? Who's paying the mortgage?
Right.
Who's going to pay that mortgage for you because you're not working, or maybe your wife stays at home and raising the kids.
Right.
Whereas if you set up the side account, compounding, tax-free, and that money's liquid and you become disabled, that company now takes over that $1,000 a month payment, and all that money that you had in there, you can turn around, pay the mortgage off, have it paid off, and you're disabled, and that account is still getting funded.
Right.
Okay. Now, let's say you were to pass away suddenly, all right, and you're sending extra money into the bank, and all of a sudden you pass away. Now what? Your wife has 2-3 kids. She doesn't work. You got a mortgage. She's got bills. She's got school.
Yep.
You got to have some kind of life insurance to pay it. Well, this thing on the side account that's earning tax-free money turns around, pays her a death benefit to pay that mortgage off.
Yeah.
All right. So now that's disability and that's death. Now let's say you live. All right. And you're 10, 12 years deep, and you say, okay, I have this money and I want to pay my mortgage off. You can certainly pay it off. You lose your tax deduction as the interest, but now you are the banker, because as you take that money out, that money grows with interest as if the money was in it. Okay. So if you take that money out and you pay the mortgage off, you earn interest as if the money was in it. So it's just a better way to pay that mortgage off, and it's faster, and it takes care of a lot of different things that could happen: disability, death, longevity, and you're already saving for retirement. Because if you never touched it, you've never touched that account, and you keep putting into it, that account just keeps growing, and you'll have that for later in life.
You're building protection.
You got it.
Through those different. So in other words, instead of doing, sometimes you hear the biweekly payment program, those things. Yeah, you're getting ahead of the interest. I mean, there are some positives there, but in the long run, you're saying set up this other account instead of putting that $1,000 into the mortgage, put that $1,000 into this account, and now you get all these different benefits.
You got it,
and you still get your tax right.
You got it, and yes, you get it. So let's say that earns an average 5% tax free every year. Okay, it's a heck of a lot than zero. Give it to the bank and it earns nothing because you got to go and borrow it.
Right.
At their rate. So just opportunity for people to save money, and we do that all the time with our clients.
More with Mark Haye coming up here. 21st Century Financial Group on the flip side of this break. Plus, Amazon driver makes the sweetest delivery. Grandma with Alzheimer's he found on the streets. We'll be right back here. Consumer Quarterback Show. Follow us online at Brandon Rhymes 1 on Instagram, Twitter, YouTube channel as well. Download our podcast, Spotify, iTunes. Consumer Quarterback Show, consumerqb.com.
Thanks for listening to my daddy's show. Please make sure to send him all of your real estate deals and subscribe to the Consumer Quarterback Show podcast on iTunes and Spotify, or check out our YouTube channel. Have a blessed day.
To get in touch with Brandon, call 813-917-1894. Online at consumerqb.com.
Five, four, three, two, one.
You're listening to The Consumer Quarterback, Brandon Rhymes. Online at consumerqb.com. Brandon is Tampa Bay's #1 consumer advocate for real estate and financial advice. Call Brandon today at 813-917-1894.
And we're back. Brandon Rhymes here, Consumer Quarterback Show. Quick shout out to our friends over at Replenish IV Solutions. I just left their South Tampa Gandy location. Had a the oil change there. Had a beautiful drip put in. It had all these antioxidants, vitamin C's, vitamin B's. The nurse hooks you up. Replenish IV Solutions, longtime friends of the program here, about 9 years now. I've been in partnership with Stephen and Lisa Gunnan. Awesome people. Check them out. They're growing their business. It's a great example of Tampa Bay entrepreneurship. They'll do home deliveries as well if you're at home. I've been there before on the weekends. You know how that goes sometimes. Hey, come on over. Give me a vitamin infusion drip. Replenish IV Solutions. Make sure you let them know the real estate quarterback sent you. And we got Mark Haye in studio, 21st Century Financial Group. We're going to jump right back into that. Before we do, I want to let you know about a couple of hot listings that we've got. 1618 De Leon. This is one of our better listings. This is a beautiful property. I mean, this is a Mediterranean palace. It's a corner lot location, beautiful property right there in the Hyde Park Village. You're walking to the bars, the restaurants. You're having a beautiful evening walking down, especially this time of year, enjoying this weather we have. 3 bedrooms, 3.5 bath, almost 2,300 square foot, multi-story townhome with beautiful balconies as well. You got a 2-car garage, lots of storage, and again, you enjoy that walkability. That's a whole section of real estate that people really like, that walkability, to be able to enjoy the neighborhood. 1618 West De Leon Street in Tampa. This property is priced just above $500,000. Great opportunity to own real estate here in Tampa Bay. You can see all of our listings, PlatinumMVPTeam.kw.com.
Sun is shining, the weather is sweet.
All right, Mark Hayes in studio here, 21st Century Financial Group, longtime friend of the program. Support the local economy by calling our hotline, 813-917-1894. You can call or text the hotline, 813-917-1894. brhymes@kw.com. We'll put you in touch with all of our expert contributors, any one of them that you want to speak with. Now, Mark, so you had a great analysis there. You know, sometimes people say, well, I'm going to put money into the mortgage, extra $500,000. You're saying, let's set up that separate account. Here's all the benefits to it. And then my next question kind of in my mind is, well, where does that money go? What are we investing in?
Yep. So we put it into our LIRP, our life insurance retirement plan. It could be whether it be a fixed index, whether it's variable mutual funds, whether it's a fixed account, but that grows on average between 5 to 7% a year, tax free. Sometimes, I mean, in the last few years, the market's gone crazy and people earn 20-25% in there a year.
Wow.
Yeah, it's just nuts. But tax free. Now, don't expect that every year, but the market did go bananas over the last decade, you know.
Yeah.
But that being said, once you get out there and the money is available and you say, okay, I have $200,000 in this account and I just made $20,000 this year, I'm going to have the interest pay the mortgage this year, meaning I'm not going to pay the mortgage out of pocket. Now all of a sudden your money's working for you.
Right.
And so that interest is paying the mortgage each month and you're keeping your paychecks. Or I've had clients say, man, I'm so happy we set this up because my kids are going to college and I need that money now for college. And they use that money for college funds, et cetera, because the beautiful thing is with LIRP, that does not go on college grant applications. So all that money that you accumulated, that you were going to pay off the mortgage with, that you say, you know what, maybe I'm not going to pay this mortgage off. I'm going to keep that tax deduction. I'm going to keep put money in there, and I'm going to use that for college. Well, that does not go on college grants. So now they get grant money and keep their money, you know, and it's still liquid. So we use it a lot for that. And the thing about it is people say, I want to pay off my mortgage, and I'm going to start saving for retirement. Well, we already started that 15 years ago by putting that extra money you were going to give Mr. Banker and put into your account, and we've already started 15 years early, and that thing is exploding at that point. So it's a really good thing that we do. I've sat down with professors. I sat down with people that go, oh, my God, I never even thought of this,
right.
Because it's always take the 15-year mortgage or send extra payments in. You'll pay it off faster.
Right.
But this is proven to be faster. It keeps your money. You become the banker, and it solves so many problems for you and your family to keep that home in the event that you're disabled or death or something should happen. Maybe you lose your job. At least you have this money sitting here to get through that period of your life.
Well, I can tell you personally, we took a hard look at our structure and our finances and our planning when I had my heart surgery, literally 2 years ago, just over 2 years ago. Had the heart surgery, had the bypass, and so you start thinking about all that you just mentioned, having that extra money. What happens if in this event, where how does that happen? Those are the things you got to consider. And I want to go back to something you mentioned before, the 5 to 7%, and then you said at some of your clients were 20-25%, which is kind of unprecedented. We're not claiming that over the radio here. Each individual person's different, with that disclaimer, right? We should say that real fast. But what happens is, with record inflation, right? So record inflation, the monetary policy, the crooks in D.C., in my opinion, that were keeping down these interest rates for years and years and years, that it hurts savings. It hurts people that are trying to save money, especially the seniors, because they're in a little bit more of a, and then we get into the stocks and bonds kind of relationship we spoke about last time. I got a quick clip I want to play on currency inflation and how that benefits the rich.
What we are doing to our currency is immoral
From Charlie Kirk.
and wrong, and has been warned for multiple decades and generations by people in the kind of libertarian community. And it makes every single person in this room poorer, and it makes the oligarchs, and it makes the people that run our society richer. A hyperinflated currency benefits people that already have hard assets that are able to move money quickly. Working people get crushed by inflation. And so let's put trickle-down economics aside. Let's say this. We need to have a monetary policy that does not destroy the value of the dollar 10% year over year, so that everyday people can save and with expectations, so that they all of a sudden don't have to say, well, I'm going to get 10% poorer this year.
Yeah, so it's hurting people, man. And that's the policy that's been in place for so long. Now things have changed. Where do we go from here?
Yep. I mean, do you want inflation to work for you or against you?
Right.
That's what we want to tell our clients. Again, the LERP, inflation works for you. As inflation, interest rates go up, so does the interest on your money. So you'll be cheering interest rates continue to go up in that account because your interest is going to go with that. And, for them to say it's 8.7% inflation when everything costs 40% more is insane to me.
Yeah.
It's not 8.7. Everybody knows, everybody sees it. You don't have to. You go into the store and buy chicken and eggs, and it's 30-40% more than it was a year ago.
Yeah.
So 8.7, they're not being truthful with that, obviously.
Yeah.
But we want we want inflation to work for our clients, and that's why we set up that separate side account, tax-free, grows with inflation. And like I said, when you get to that point where you're going to say, I'm going to pay the mortgage off, guess what? I'm going to go buy a rental property.
Yeah.
And I'm going to take that money and go do that. And all of a sudden you have two pieces of real estate. So it's just a way for you to leverage and become wealthy. And that's what wealthy people do.
Yeah.
Is they become their own banker, and they keep their money instead of always going to the Mr. Banker and saying, I need my money. Can I get a loan? And the problem is when you need the loan at the worst time, it's the hardest to get.
Yeah, that's when you can't get it because the scores are down, something happened, credit card payment was late, whatever it might have been. Mark Haye, 21st Century Financial Group, financial advisor here on the Consumer Quarterback Show. Reach out to the show hotline, and then Mark, if they want to contact you directly, what's the best website and social for you?
Yeah, you can shoot me a text at 727-804-7220, or you go to our website at xxifinancial.com.
xxifinancial.com. Good stuff today, man. Appreciate
Thank you very
that.
much.
That was really insightful.
Thank you.
All right, coming up, taking a quick break here. Nick France coming up. He's with CPF Loans, cpfloans.com. You've heard Justin Kelly on the program before, and Nick is going to be joining us. He's a senior mortgage loan officer with the company. Plus, feel good story of the day. Find out about the Amazon driver that helps save grandma here on the Consumer Quarterback Show. We'll be right back after the short break.
Hey, this is Grant Cardone, and you've been listening to the phenomenal Brandon Rhymes, the Consumer Quarterback Show.
To get in touch with Brandon, call 813-917-1894. Online at consumerqb.com.
Hey, Brandon Rhymes here. We are looking for real estate investors. We've got a new relationship bringing us a tremendous amount of off-market real estate investment opportunities. So text the word investor to our hotline, 813-750-0550. Off-market real estate investment opportunities. Text investor to 813-750-0550. Brandon Rhymes here, Platinum MVP team at Keller Williams Realty, looking for real estate investors. Send us a text.
Selling commercial or residential property? Don't leave money on the table. List with the Platinum MVP team at Keller Williams Realty. I'm Brandon Rhymes. Reach me at 813-670-7372 or platinummvpteam.com.
Hey, Brandon Rhymes here for Cleaning Commandos here on the Consumer Quarterback Show. Cleaning Commandos are hiring, and they're offering competitive wages, flexible hours, relaxed atmosphere, and a sign-on bonus. Reach out if you'd like a career with the Cleaning Commandos here in Tampa Bay. Info at cleaningcommandosllc.com or call 813-750-0550, 813-750-0550. Cleaning Commandos, Consumer Quarterback Show.
You're listening to the consumer quarterback, Brandon Rhymes, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at consumerqb.com.
All right, Brandon Rhymes, Consumer Quarterback Show, Platinum MVP team, Keller Williams Realty. And we'd love to help you win in your real estate deals. If you're buying, selling, or investing, we like to feature our real estate listings live on air. 6361 Highway 301 South in Riverview. This is a beautiful property, commercial property, over $1 million. $1.7 million is the ask price. Got a corner lot, 0.81 acre lot here. Beautiful property at 6361 US Highway 301 South in Riverview. Currently operating as a U-Haul with a mechanic shop in the back. Great opportunity for that business owner that's looking for some prime land on a major thoroughfare close to the interstate. 6361 US Highway 301 South in Riverview. You can see all of our listings at platinummvpteam.kw.com.
Somewhere sunny and 75.
All right, Nick France, welcome in, sir.
Thank you. Pleasure to be back.
Hey, thanks for coming in. And CPF loans, you guys are doing a lot of business out there. What are you seeing in the marketplace right now?
Absolutely. So, as I kind of mentioned last time on here, right, reshuffling of the market. If you look at the real estate and mortgage world last year and you mirrored it to this year, big different space that we've entered. So, primarily to do with finances, right? If you know interest rates, if you know the inflation word, right, you kind of saw this coming. You could see from the beginning of last year to now, rates bound to come on the rise, which they have done.
Yeah, and that's affected the buyer pool. We see it, on our days on market. Days on market are up. Sure. You're seeing more price reductions than ever before. Well, not ever before, but in the last 12 to 18 months, we're seeing that. Open houses, even some of our open houses are not getting as much traction or attention. So, what are you seeing on your end? I know a lot of people are talking about that 2-1 buy down.
Sure, a lot of creative ways in this market to kind of help fuel buyers and put a sword in their hand to combat, what they're up against. Right. Last year, we have a new program that's come out. If this program was out last year, you wouldn't be able to use it because rates were so low. This is a program, we call it our Pay Smart program. And basically what it does is it allows you for the first couple of years to go back in time a little bit and get a break on your interest rate as low as 2%, down on the interest rate for the first year. And it step ladders its way up back to your original payment, rate, I should say, that you were qualified for. So a lot of buyers are using that right now and sellers as well. You don't want to put a price deduction of $10K on your listing, especially realtors, right? You want to sell for as close to list price as you can.
Right.
So we have a lot of people that are using our program saying, hey, instead of reducing the price by $10,000, our seller will give your buyer $10,000 for your closing costs for a rate buy down. And that's getting creative, right? That's helping sellers and buyers move a market forward.
Keep the deals moving, keep deals flowing. And
you got it.
So what it is, essentially, it's a gift of equity in a sense where typically you'd see like seller concessions. They're calling it seller concessions, whether it's towards down payment or closing costs. In this case, what Nick's talking about is to structure it as basically a credit at closing from the seller to the buyer. What we're going to do with that money, what the lender is going to do with that money is buy down the rate. Right?
Correct. So I have an example right now. Just, we had a loan in the sense where it's a 6% interest rate for year one, instead of paying 6%, they're paying 4%. For year two, they're then paying 5%.
Okay.
And then come year three, they're back to their 6%.
Yep.
Now, hopefully, in a perfect world, within 36 months, hey, if we can get a break on interest rates and you have the chance to refinance before you ever see that 6%,
right,
then God bless you. And if rates are higher than 6% in 36 months, God bless you, right? You made out. It's a win-win.
Yeah.
So
absolutely, yep. And we'll see what happens with the economy, with elections, things like that,
Sure.
how that plays out, and what could potentially happen there. We're talking with Nick France here on the Consumer Quarterback Show. I'm your host, Brandon Rhymes. He is a senior loan officer with CPFloans.com. CPFloans.com. Longtime friends of the Consumer Quarterback Show here. So we're talking about conventional loans, typically your FHA, your VA,
sure,
those types of deals. Conventional
You
products.
got it. That's our wheelhouse. That's what we like to specialize in. If you know our story, I won't take too much of time on that. We got a lot online about our story. We're based off the same values and principles of a veteran himself. So we connect with VA loans a lot as well. We love those.
Yeah, so VA, just a reminder out there, 100% financing.
Oh, they're some of the best loans. The veterans, they go through a lot to have many rights, and that's one feature incentive that you should definitely utilize. If you don't know about it, ask. Because they're awesome.
Yeah, our government's done a lot of things mediocre, some would say poor, but the one thing they did get right is this VA loan program for veterans. If you know of any veterans out there that haven't utilized that, they don't know about it, they want to be educated about it, reach out to the Consumer Quarterback Show. We'd love to help them. We actually offer extra incentives as well, quarter to a half point discount if they're buying, selling, or investing with the Platinum MVP team, Keller Williams Realty. I'm sure you guys have some awesome incentives too.
Absolutely. Always looking out for the vets. They get that extra treatment, especially in the mortgage world, even with guidelines. Always extra layers when it comes to looking out for veterans.
Yeah, that's awesome. What are you seeing also, outside? Sometimes people say, well, I don't have the money to put for down payment. What are some of the biggest misnomers that you come across on a daily basis, Nick?
Yeah, absolutely. So one that I take for granted, right? VA, we're talking about VA, that is a 0% down program. If you're in the real estate space, you might know that, but a lot of consumer show, they don't know that. So that's number one. VA loans are great. You have your USDA loans, which are also 0% down, but you could be subject to certain locations.
Yep.
So with those two loans, those are obviously the best. You do have your down payment assistance loans out there, but sometimes they could be a second lien as well. They could be, there's strings attached. So just make sure you know all the hoops that you're jumping through and what you're getting tied into. But there are a lot of programs out there.
Yeah, absolutely. More with Nick in just 1 minute. I want to get into our feel-good story of the day.
Tell me something good.
All right, Amazon driver makes the sweetest delivery. Grandma with Alzheimer's he found on the street. So a Ring doorbell captured the 92-year-old grandma wandering away from home. Wilmer, and Amazon delivery driver, spotted the elderly woman named Gigi wandering in the street. The driver was able to find the phone number to Gigi's granddaughter on her medical alert bracelet. After speaking with the granddaughter, and assuring her that Gigi was safe, he drove her home and delivered what has to be the most interesting deliveries of his career. As you can imagine, the family was very thankful. So there's our feel-good story of the day. That's always a funny one.
Awesome.
Yeah, it's like those Ring doorbells nowadays. They're seeing a lot of stuff. You see the ones online where people are stealing packages.
Oh, yes. Yeah. I've even seen some fake ones, right? They'll set the package up and glitter will pop out. It'll go everywhere. There's some good videos out there. Yeah, those rings.
I saw
creative.
one. It was something like instant karma. The person was trying to steal the packages, and the guy was at the car, and she comes up, and she had some kind of, I don't know, it wasn't the best shoes, I don't think, but she grabbed the package, turned and started to walk away or run away, rolled her ankle, hit the ground. Oh boy! It's like instant karma. There you go.
That's it for you. Perfect definition.
But yeah, in this world of cameras and Ring doorbells, it comes into play. That's awesome. So if you just joined us, we're talking with Nick France here on the Consumer Quarterback Show. CPFloans.com, senior mortgage loan officer, and that's a key component too. Is when you're in the real estate space. Of course, it was much more competitive 6 to 8 months ago, but you're going up against other buyers in many cases. We're still having deals that have multiple offers. My mom actually is in a multiple offer situation right now on one of a property that she's buying.
Best of luck.
But you see it, you see
Absolutely.
these multiple offers. So what does it mean when somebody has a pre-approval from CPFloans.com? What does that mean? What are they holding in their hand?
Yeah, it's a great question because especially even realtors, right? Consumers definitely, but even realtors, you look at a pre-approval letter and it should be like gold. Many people think it's as good as gold. That's the farthest from the truth. You really got to go, just like when you're researching anything online, go to the source, right? What did we do to obtain this letter? So you mentioned with us, right? We're gathering the same stuff an underwriter's going to ask you for, all the documents, all that information, and not only is we're gathering it, we're validating it, and we're putting it through that same underwriting system that an underwriter would use. Yeah. So, I've had instances where I have someone who's already pre-approved, not uncommon.
Yep.
And I've found they are $100,000 off from what they really should have been pre-approved for.
Wow.
It happens way more often than you think it should or it should, period. So that's one thing. It's only as good as information that you put in as to what you're going to get out.
Right.
So with us, we're going above and beyond. That's something that we're pretty prideful.
Yeah, absolutely. So 20 years or so in real estate now. Some of the earlier years was as a mortgage loan officer. I worked in as account executive, but I understand the importance of what you're saying there. You've really got to dig in. Sometimes, if it's a self-employed borrower, there's tax returns. You got to really know how to read the tax returns. If there's corporations involved, you got to get that information. Divorce, okay, well, let me see the divorce decree, bank statements. So it really comes down to the knowledge of the loan officer taking the application to ask the right questions to dig a layer deeper.
Very correct. So I've had conversations where I'm talking to someone, they've been told to provide X, Y, and Z, and I'm like, if you go through the right conversations, you shouldn't even be asked of that certain item. And a lot of people, right, you mentioned it, you got to get bank statements, tax returns. You got to get someone off their butt and help them go get documents that they couldn't sometimes read themselves.
Right.
So it's something that not many lenders want to do.
Yep.
And they'll be quick to say, yeah, here's your letter. Come back when you got something like under contract, would you?
Right.
That's kind of a lot of mentality.
Exactly.
And especially last 24 months, you can kind of let that slide. Rates are so low, people could care less.
Right.
That's not going to really, if you're a loan officer or a realtor and that was how you're doing your business, not going to be sustainable for you. So I think not being lazy about it, doing that homework up front, whether you're a buyer or a realtor or a lender, it takes all three people, to do a little work up front.
Yeah, and that's what scares me about, with inflation and they're raising the rates consistently and they're signaling that they're going to do that. It seems like there should be some other mechanisms that they can use rather than the one trick pony. They keep beating up the rates on people. It's going to really slow down the mortgage industry, the real estate. And if you look at the benefits and the economic impact of a single family home purchase. You got a family buying a home. You got the realtor, the mortgage broker, the title company, the insurance companies, the home warranty companies. Of course, they're going to be doing some updates at some point. They're going to be going to the Ace Hardwares and the hardware.
The domino
stores.
effect.
So think about that.
Applies.
The trickle effect that you have from that, the economy that's driven from that. And it's a pretty deep thing, but these people in D.C. that are kind of disconnected, they don't understand what the impacts of their decisions are. That's what kind of worries me about where we're going, because we're one or two decisions away from a deep depression versus what we're already in, a recession.
Sure, and you look at why are mortgage rates going up, right? If you take a step back and you're showing this to someone who's not at all versed in finance, you could take a look and you got to point the finger at that inflation, because you don't see rates go up if as much as they have, right? If you don't have that inflation number that we're trying to chase after.
Right.
You got to take a step back and say, okay, someone's going to be buying, an investor that regular people don't know. Big dog investors are going to be buying pools of these mortgages.
Yep.
Why are they going to want pools of mortgages at 2, 3, 4%?
Yeah.
If your inflation is quote unquote 8-something%, right? It doesn't even make sense for them, and they're not dumb individuals; they're smart individuals. So you got to say, okay, we got to change some tide. We got to get these interest rates a little more enticing. We got to do something to entice these investors to keep buying them. Well, simultaneously, you got a big inflation problem on your hands. So it's a bit of a bigger issue than I think some people kind of glance over. You got to take a step back, and we're talking to consumers. What do you as a consumer do about this, right? You're not Nancy Pelosi. You're not. Right? What can you do?
Right.
You got to look at your own household, and you got to get that in check. We're talking about interest rates on the rise, and you hear a lot of negativity in the market.
Yeah.
I'm pretty positive. I'm feeling good. I just helped someone close last week in a raising rate environment.
Yep.
Debt consolidation loan. Talking about a guy paying $3,600 a month in mortgage, auto loan, credit cards. We just helped him get all that down into one mortgage payment at about $1,400 some dollars.
Yeah.
So like it's there. There's opportunity there. There's a chance for you to lower your bills. You got to look in the right spot.
I like that. Economy out there, economy between your own ears. What can you take care of? Control your financial future.
Bingo.
Nick, always a pleasure, man.
Yeah, absolutely. Thanks
for
having
coming in. And we want you to please go out there and consider committing a random act of kindness. Do something kind for one another. Be a force for good in the community. And we'll see you next time right here on the Consumer Quarterback Show, ConsumerQB.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes. Whether it's real estate, consumer, or financial advice, let Brandon call your next play. Call Brandon Rhymes at 813-917-1894. That's 813-917-1894. Online at ConsumerQB.com. And join us next time for the Consumer Quarterback Show.